Hey everyone, how are you? Hope you're doing well. So, today we're going to talk about the downgrade that happened today. There was a credit downgrade, and this happened by Fitch. Fitch is a rating agency. So, basically, it's like a report card of the government's financial situation. So, you take a picture of the financial situation and you give it a grade. So, do you get an A, a B, a C, D? So, there's a lot of debt in the United States. And so this report card, they took a picture and they decided to give it a lower grade. So that's what happened today. So originally it was at AAA and they downgraded it to AA plus. So a downgrade happened, a report card, if you will. So kind of like the difference between your child bringing home an A versus a B. So that's what happened today. It is a rating agency called Fitch. As a result, the stocks are down a little bit. And the stocks are down because people start to sell when they hear negative news. So they're selling or buying based on what the news is saying. So down a little bit. S&P is down 1.3%. Dow is down 1%. And the NASDAQ is down more than 2%. So some people are surprised, like on Wall Street, and then other people are angry because of the timing of this downgrade. So as you know, United States has been in debt for a long time, like a whole lot of presidencies. Presidents have already saw this situation. So the president we have now, the president in the past, the president before that, the president before that. Um, Kind of all saw the same picture with the United States having so much debt. So some people are angered by the timing of this report card, as you will, because of the fact that they didn't do it while other people were in office. So also there was a debt default that was averted. So instead of looking at the positive, they chose this time to take the report card, if you will, and give it a lower grade, which is a credit downgrade. All right, so that is what is going on. The United States, as you know, it has growing levels of debt, so that's really nothing new. As you know, it has increased political instability, and then they use these three factors for the downgrade. The three factors they looked at, this rating agency, the three factors they looked at were the rising, growing levels of debt, political instability, and then they also looked at the insurrection that happened on the Capitol January 6, 2021. So you all remember the insurrection, right? So that was in 21. Do you see how fast time goes by? Time goes by fast. And did you realize that there were so many hate groups out here? Like they had them listed on the news. Did you realize that there were so many out there before this insurrection happened? So some things are better not to know, right? So anyway, this is what is going on. The rating agency by the name of Fitch, they did a credit downgrade. downgraded the United States government's credit rating. As a result, stocks are down today. So, what is the bottom line of this? Well, you know, on this channel, we talk about finance, right? We talk about the stock market, we talk about real estate, and we talk about business. So, stocks are down today. Wall Street is surprised. And then some people are angered that they chose to look at the negative view instead of the positive view of averting a default. So, the bottom line to this is, as it pertains to the stock market, stocks are down today and they will be back up in a few days. They'll be back up tomorrow or a few days. So, it's best to invest for the long haul because the stock market, it goes down and up. It goes in cycles. And people buy and sell based on what they see on the news. Right? The other thing is that because stocks are down today, this is actually a buying opportunity for traders. I'm sure traders are aware. They see what is going on with the news. They know that the news dictates the stock market somewhat. And so what the traders do is they buy low and they sell high. Have you heard that phrase before? So you buy low, then when it goes back up, they sell high and they make a profit. And that is essentially what traders do. So traders who know what they're doing, they are making millions and millions of dollars in this game of money. This is a game for some people. Are you aware of that? All right, so best to stay in. Stay in for the long haul. If you're not in, get in. Also, multiple streams of income is important. You know, no one puts all their money in the stock market. So, multiple streams of income, buying property for wealth creation, and either creating a business or businesses or buying a business or businesses. Then you have the other options out there that you are aware of that you should just be a little bit more careful with those, and that is crypto. And then there are other things out here that I have mentioned before on the show, such as private equity. And then I already mentioned what the traders are doing, right? So do me a favor. If you like this channel, hit the like button. If you're not a subscriber, hit the subscribe button and notification bell next to it so that you won't miss the episode. Also, leave a comment. Let me know your thoughts. And on your way out, don't forget, hit that like button. Thank you for watching. Have a good rest of your nights.